Tim Bingham of Delta Derivatives gets our day started now with a trader rundown, and we saw a bounce back in the market yesterday. So the buy on the dip mentality has not left us yet.
Absolutely not. Corona kind of turned into Corona Light here, and rumors that the Fed may be cutting again. Certainly Fed fund futures shot up on that probability just by the slower growth that may entail post the outbreak here. So stocks taking it in stride here. I mean, the S&P and Dow and NASDAQ are still all up for the year, believe it or not. So even with all the ruminations over the past few days, we're still positive for January.
Apple reported earnings after the close last night. What are your overall thoughts about this stock, Tim?
I think the big tech stocks are getting a little bit too big. I mean, if you look at the top four, if you look at Microsoft, Apple, Google, and Amazon, they comprise 17.5% of the S&P 500, which is higher than back in the NASDAQ mania of 2000. So big cap tech getting a little stretched here, certainly on valuation. So I prefer some of the other names that have been underperformers. The oil stocks I really favor here on a dividend basis as well, and also on price basis.
What would you be doing with oil? What's the play?
Yeah, absolutely. So I'm positioning by selling out of the money put spreads on the XLE, which is basically the big cap energy ETF, has Exxon and Chevron, and also doing it on those two individual names. Kind of like the fact they're at the lows of the year, that they held support. Oil kind of that 52 level is key here, and I like the fact that dividends are well over 5% with a low payout ratio, so I can kind of hang my hat on that. And selling on the money put spreads, the higher the dividend, the bigger premium you get.
Very good, Tim. Thank you.
You bet, anytime, Ange.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.